Hello, wealthy, successful, money-making traders. This is your trader's friend. Thank you for joining me for another video. Guys, I'm so glad you can be here with me. Today, I'd like to talk to you about how to earn 100 pips per day in the market. Number one, you need to select 5 pairs with lots of liquidity and low spreads. Number two, you need to have the discipline to wait for the proper trade setup before entering the market. And when I talk about a proper trade setup, I mean something like this, where you have an engulfing flagship reversal candle. Now you want to buy that next candle. However, if price then comes to close below that engulf, you know it's simply a trick trap or the market is about to be choppy. Here's another situation where you have a shooting star, further confirmation. Here you have a hammer, further confirmation. And this is an even stronger confirmation because now you have a new higher low and the market continues on. So that's what I mean by waiting for a proper trade setup. Now I want to say a lot of times we spend time in the market waiting and looking for reversals. If you get a reversal candle pretty soon after you get a new trend, then most of the time it's simply a trick trap like right here. That is a strong candle. However, you can see we've only been 10 minutes into this new trend. So that's what I mean. If you enter a market and price comes to close below the previous candle because you would have entered here, then you're out of that market. But you can see here that price did not come to close below that candle. Now, if you earn 2 pips per pair per hour, you will trade 10 hours. If you earn 5 pips per pair per hour, you'll trade 4 hours. If you trade during a lot of liquidity, then you can hit the 20 pips per pair per hour and you're done. Usually within that hour. So I'm saying per hour. Usually you'll get those 20 pips in that 1 hour. The main thing is to ride your trades until they show that you no longer have an advantage. And when I say you no longer have an advantage, I mean a situation like this where you have a strong push to the downside and then the bulls come in and engulf that previous price action and totally dominate the previous candle. That's what I mean when you no longer have the advantage. You want to stop for a while and come back into the market again later, perhaps as soon as the next hour. But if you got a spectacular trade in the previous hour, then chances are the market's going to chop back and forth for some hours or until the middle of the next session or sometimes even longer. If you get 100 pips or more in one session, take the rest of the day off, because you are trading a systematic approach to wealth building that minimizes your downside risk. So don't get greedy. If you get it in one session, go ahead and take the rest of the day off. Also, be aware that different parts of the week will employ different trading strategies. Most of the time, your market's going to be swinging back and forth like this. But I want to say, if the market is trending, your biggest advantages are going to come in trading in harmony with that trend. And when I say trade in harmony with that trend, I mean something like this, where price has fallen down to a moving average and you have an engulfing candle at that moving average. That is an advantage with confirmation. Now, let's take a look at a few charts. Now, this is what you're going to have most of the time. And again, you want to trade in harmony with your trend for your best and most profitable setup. However, a lot of times the market just isn't going to be trending. So you can take these trades both ways. But just keep in mind, a lot of times when you're trading a kind of swinging market And for people who trade swings on the daily time frame, I'm just talking about on the short term time frame. When you're trading a swinging market like this, where it's swinging back and forth, a lot of times the market is going to start out really wide, and then it kind of starts forming a pattern. You get into it, and then what you'll note is that the pattern starts getting smaller and smaller until you get to a pinpoint where you get the breakout. So a lot of times those breakouts are simply trick traps. If you trade the market with the breakout and then price comes back to close below or above that breakout candle, get out of the market. It is simply a trick trap. Now, if you're trading a market like this, where price is just kind of chopping back and forth, what you want to ask yourself is, where is your 200 SMA? If your 200 SMA is above this kind of price action, you are looking to take shorting opportunities in the market. If it is below this 200 SMA, I'm saying your 200 SMA is below your price action, then you are looking for long opportunities in the market. Now, you can go both ways, but be extremely careful as the market is winding you up to trap you. Now, if you're fortunate enough to get a really liquid market like this, then usually you have no problem earning those 20 pips per pairs. And I'll tell you the 5 pairs that I look at. I look at the Euro USD, the USD JPY, the Euro Yen, the Pound Yen, and the New Zealand dollar versus the yen. And this is exactly what I mean by your strong move. After you get a strong move in the market, all you get is just a chop. Look at that. That's literally hours of chop. That's about 6 hours worth of chop before you get a strong move again, and then you get that strong pullback that looks like a legitimate reversal. But where's that 200 SMA? Is down here below. So you are looking for opportunities to trade in a bullish manner. And it doesn't look like the market's going to go anywhere. But look at that strong move. And then price came back to retest that low, chopped you for some hours before you got another strong move in harmony with that trend. Oh, and I am going to put a link above for the video, and I think it was called 104 pips in 2 hours. Now, I was trading that, but it was in a trending market, but you can see the concept of what I'm talking about in trading 5 different pairs to get to your 100 pips. And since the market does not trend like this most of the time, you have to choose your setups wisely and be very tight with those stops. If you wait for a proper trade setup that fails, it is simply a trick trap. I want to remind you that you can absolutely do this. You can be successful at Forex. Have an amazing pip-filled, loving life.